Hi class, Professor Harrison here. In this video I'm going to go through how to create a statement of cash flows using the indirect method from two balance sheets and an income statement. So the first thing that we need to do is look very closely at the problem and the information that we're given. We scan down the statement of income. We look down the balance sheet, noticing which year is the previous year and which year is the current year. What I've done on this balance sheet, you'll notice here, is that I have put the change between previous year and the current year off in a column on the right-hand side. You'll see that in bold and italics. On the left-hand side, I've made another column that says O, I, or F, and this indicates which section of the statement of cash flows that line item deals with. In starting with the statement of cash flows, there are four pieces that we need to get accomplished. The first piece is the statement of cash flows from operating activities. The second, statement of cash flows from investing activities. Third, statement of cash flows from financing activities. And last, the net change in cash. What often happens is some students leave off this last section and they've given an incomplete statement of cash flows and lose points. Let's get started. First, you'll hopefully notice that I have my heading already to tell the reader of my financial statement what type of statement I'm using. I put in red here that we're using the indirect method for this particular video. We start off with the indirect method with net income. I look at my income statement and I copy over my net income of $18,000. The next pieces that I need to adjust when it comes to the indirect method is first to remove anything that has already been calculated into that net income, non-cash items. There are two usually that can be found. First is depreciation, second is amortization. Since there's no amortization on our income statement, we only have depreciation, and we add back the depreciation expense of $6,000. The next part we need to do with our statement of cash flows, the operation section, is we need to make sure that all of the pieces in that portion of the statement correspond to operations. So we have to remove anything that doesn't correspond to that. If you'll notice in our income statement, we have a gain or loss item. That gain or loss item happens to be from the sale of land and it should be in the portion that is for income statement. For investing activities. So we need to get it out of, we need to remove the gain, subtract any gain, or add any loss. We had a gain, so we will subtract that $3,000 gain. The next piece has to do with the balance sheet accounts of accounts receivable, inventory, and accounts payable. All of those have to do with the operations of the business. Notice that we're interested in the change in each one of those accounts. If there are other similar accounts, we would have those listed there. In order to understand the change, I'm going to use this equation above. It means the change in cash is equal to the change in liabilities plus the change in owner's equity minus the change in all other assets. Looking at the change that we notice on our balance sheet between accounts receivable, it's a positive $3,000, meaning that our accounts receivable went up from the previous year to the current year by $3,000. Since that is an other asset, we do the opposite sign. We subtract that change in accounts receivable. We next look at inventory. Inventory has a negative, a decrease of $4,000 between the previous year and the current year. Since it's a other asset, negative times a negative is a positive, we add back that change in inventory, $4,000. Our change in accounts payable, went down by $4,000 from the previous year to the current year. Since that is a liability, there's no change in sign, we subtract that change in accounts payable. In totaling that up, we have a net change in cash flows. It's a positive $18,000. Next, we move on to the statement, or the portion of the statement, cash flows from investing activities. In here, this would be any changes of things of long-term assets, such as plant, property, and equipment, other than depreciation, land, intangibles, long-term investments. These would all fit in the section of investing activities. In this problem, we only have the sale of land. And this, from the footnote, we get that the land was sold for $8,000, bringing in a positive cash flow of $8,000. Since there's no other activities that go underneath that section, that is also our total, a positive $8,000. Looking in the last section, these are changes in long-term liabilities and the owner's equity section. We noticed that we retired some bonds. Our amount due on bonds went from $48,000 to $4,000. That's a decrease of $44,000. That was the retiring of $44,000 worth of financing through bonds. At the same time, we issued common stock. This is evidenced through the common stock line on our balance sheets, plus the additional paid in capital. For our purposes as financial analysts, we put those two together. The total change there was an issuance of $23,000. Last, we notice the change in retained earnings, and we add net income to our retained earnings. The difference there is a cash dividend of $2,000. $2,000 was paid out in cash dividends. The net change from our financing activities, when we do all the math here, is a negative $23,000. Now we do the last section of the statement of cash flows. We take the net change from our operating activities. We add the net change from our investing activities. We add the net change from our financing activities, and notice that the entire change in cash over the year was $3,000. We then go back to our balance sheet and take our previous year, or cash at the beginning of our period, $3,000. We add the net change to it, it becomes $6,000. We then double check the $6,000 should be the cash at the end of the period, and if that matches our balance sheet, which it does, we have completely explained the change in cash. This is how we accomplish the statement of cash flows. Thanks for watching, and I hope you'll find this video helpful as well as others.